Hey, it's Alex here. I'm the CPA with Shareholder Accounting. My background was auditing the financials of publicly traded companies. Now we help small business owners with their accounting and advisory throughout the year. And today we're going to talk about how to record personal owner distributions within QuickBooks Online. And so the main thing I want to talk about is the why behind it. So what is a distribution versus a W-2 salary, how to actually record it, and what that looks like on the financial statements themselves, so you're fully equipped with that knowledge. So the first thing to cover is, number one, what is the difference between distribution and W-2 salary? Because as most of you probably are, S corporation owners, you're going to pay yourself in two ways: W-2 salary and personal distributions. And so your W-2 salary is the one that runs through the actual payroll system. You withhold payroll tax, you pay payroll tax on the employer side, and there's a lot more moving parts that come with it. You don't get the full amount that you pull out. And then on the distribution side, that is simply moving money from the business account to the personal account. That's all the distribution is, whether it's a check, a Zelle in this example I'll go through, just moving money. And the best part about the distribution is you are not taxed on it like you are with payroll tax. You're simply moving $2,000 from one account to another, and you keep all of that $2,000. So that's kind of the difference between distributions and W-2 salary as a starter. Now, how do you actually book this in the accounts? Well, the biggest misconception that I'll see is that business owners believe their personal distributions impact their expenses on their profit and loss. So if I pull up an example of a profit and loss here, so these are the two main financial statements. So this is your income statement here on the right-hand side. And so what most business owners believe is that when revenue, obviously their income statement starts with revenue, it has expenses after that, and you're left with your profit, your net income. Most business owners believe that your distributions will show up under this expense category, when in fact they do not. Your income statement from the business should only show your business income minus your business expenses to get to your business net income. Whether you put money in or take money out personally has no bearing on your income statement, right? Because think about if you were to put $100,000 into your business and that shows up as income, that wouldn't make any sense. That would not be fair to show your personal money coming in as income to the business. And that's why your personal distributions or contributions show on this left-hand side called the balance sheet on the bottom right red box called shareholders equity. Your personal contributions and distributions show under shareholders equity, and it has no bearing on the business income statement. Because remember, when you're looking at the income statement from a business perspective, you want to know the true activity of the organic business itself. How much is it producing? How much am I spending? What's my leftover? You don't want these personal expenses to be altering the end result. And so that is to give you a high-level picture of why personal expenses don't show on the income statement. They show on the balance sheet under equity. Okay, that's the biggest difference. So the reason I say that, as I walk through an example, is just to walk through a quick example here. You can see the Zelle payment to Emma. Let's say Emma is the owner. And so we're going to categorize this one to have Emma as the vendor. So if we don't have an existing vendor named Emma, P, let's just say her name is Emma P. We're going to create a new vendor for Emma P. And then also for the account, this is the important part. This needs to go under either what's called owner's draws or distributions. And so you can see it actually says sub of shareholders equity. So that's the main thing. It needs to be an account within shareholders equity. And that's how we know it doesn't show up on the income statement, but rather the balance sheet. And so just to show you real quick how that would actually work is if I go to my chart of accounts, and let's say I'm creating a new account up at the right-hand side here, I'm going to create new account and shift this over a little bit. I need to make sure if I'm doing like owner's draw, let's say, as a new account, my account type needs to be equity, not expenses here. I'm going to go under equity, and then my detail type is simply going to be distributions, partner distributions, right? And I'm going to save this, and that is going to create my equity account that I can then use once I'm classing this transaction. That is going to be under equity, under my distributions. And when I class this and I post this, This will not show on my income statement. This will show on my balance sheet as a reduction in my equity. That is the difference between your business expenses, your distributions, and how to actually book your personal distributions within QuickBooks Online. For most small business owners, if you're not getting any kind of guidance on your numbers on a monthly basis and you believe your QuickBooks file is very inaccurate, we have something called the CPA system, which is a weekly subscription where we help business owners with their bookkeeping. We take the QuickBooks completely off your plate, so you're getting accurate numbers every single month. And on top of that, you're getting the strategic advisory to lower your tax liability proactively and improve the business operations and margins. So that's called our CPA system. We meet with our clients at minimum once a quarter to review the numbers together, lower tax liability, improve the business margins and the business as a whole. So if you're interested in that CPA system, you can check out strongholdaccountants.com. Again, my name's Alex, the CPA with Stronghold Accounting. Thanks so much for watching. Take care.